Hello everyone, welcome to the financial information. My name is Marvin. In this video I am going to talk about the tariff and how it's going to affect the stock market. And before I begin, you can actually subscribe to this channel. I make videos about the stock market, personal finance, and how to make money online. But now let's begin with the stock market and let's see how the stock market did during this week. Now you can see it was a really bad week for the Dow. It went down 5.68% during the week, and for the year it has been negative with 4.80%. So it gave all the positive gains that it had during January. Now let's take a look at the S&P 500. Now for the S&P 500, it was the same thing. It was negative during this week. It went down 5.95%. And throughout 2018, it had been negative 3.19%. And both of those were positive a couple weeks back. Now let's take a look at the Nasdaq, which contains mostly technology stocks. Now you can see the Nasdaq had the worst week out of the three. It went down 6.54%, and during the year it has been positive with 1.29%. And that decline began a couple weeks back when the president announced some of the tariffs that are going to be implemented against China. The president set in motion tariffs as much as 60 billions that are going to be implemented against Chinese imports. And just on Friday we have the news that China is planning to retaliate. The Chinese government said that it would impose tariff to around 3 billion worth of American products. And those products contain fruit, pork, wine, and some steel. And they included more than 100 products. Now you might think that 3 billions, it is not the same as 60 billions. But when you take into account that China is just giving the United States some early signs that they are willing to retaliate. So in my opinion, the stock market, it is going to have a lot of volatility in the next few weeks. We're going to have earnings during next month, and usually during earnings we have a lot of volatility as well. But now let's take a look at some of the companies that have a lot of Chinese exposure, and that is going to affect these companies for the short term. Now let's take a look at the list, and as you can see on the screen, Skyworks Solution has around 85% exposure in China, Corvo has around 75%, and Qualcomm has around 69%. Those three stocks are in the semiconductor space. And then we have Win Resorts with around 64%, Nvidia and Micron have 55%, and Broadcom has around 54%. And the majority of these stocks are in the semiconductor space. So you want to be careful, because at this moment I think earnings are going to be overshadowed with this type of news. Now that doesn't mean that the stock market is going to tank. Now let's take a look at the next news. And in this article, you see the deficit and the surplus that the United States has with China. Now you can see the computers and electronics are the biggest deficits by far, with around 167.3 billions. So that sector probably will be the most affected when we have this type of news. But also you want to pay attention to some of the United States companies, for example like Caterpillar and Boeing. They're going to be affected with this type of news. So I'm looking at the stock chart. We're looking at the Dow Jones. The first thing, we're going to take a look how the Dow has been doing during the last 2 or 3 years. Let's take a look at the stock charts and look at this. This is from March all the way to November 2017. The Dow Jones was just basically digesting because the stock market had gone up so much prior to 2015. In addition, we had the oil crash that happened in 2015. And I believe during December to January, we had one of the biggest companies, which was Apple at the time. It had a huge drop. If I remember correctly, I think Apple went down around $92 price, I believe. So it actually had a huge effect in the stock market. But now let's take a look how the stock market has done since November 2015. So as you can see in the screen, I'll draw a line between February 2016 up to this point. And that lines, those parallel lines are called channels. And for the most part, it has been really good, except when we had the new president that was elected in November. And that happened because we had a lot of doubts about the president. But even then, the stock market continued to rally. Now you can see in the screen, during January, the stock market went down a huge amount. That's what happened when the new tax plan went into effect. And that is when it actually broke over the channel. And actually, as you see here, during January, it started to pull back the next month. And as you can see, it's breaking down right here on this channel. And if it breaks down, we can see two types of support. The first one is around the 23,500. and the second one is around the 2200, or the stock market can resume, and hopefully that happens because we can see the stock market continue to move again. So this is what you have to be really careful, because if it breaks this line, we can see a pullback around the 22,000. That is quite a huge pullback, and we haven't seen the Dow at that price since around September or October of last year. I think most likely what could happen during the next few weeks is probably we're going to be playing around this area, and hopefully that's what happens around this area. And the reason is you need to create some support. You can have the stock market go up all the time, and that is the reason why I mentioned this type of support from 2015 all the way to 2017. This is a digestion after the stock market has gone up so much, and you need those type of pullbacks in order for the stock market to create new highs. So as you can see, the S&P 500 is very similar to the Dow. You can see that the S&P 500 was waiting to go into a huge run during basically in this date, which was on July 2016. It had continued to go up. It was waiting for the new president, and whoever was elected, the S&P 500 was going to continue going up. And this is what I like to see in a technical analysis for a stock. Even though that the S&P 500 had gone up a little bit more than I wanted, it actually had a good time to digest, and that digestion happened during June all the way to September. That's when the stock market was selling off due to the technology stocks. Look, from September to December, it was trying to do the same thing that it had done from these few months. It was doing really great until January. But you have to pay attention during January. You can see an accelerated return in a matter of weeks. And when that happens, the pullback is going to be a little bit more aggressive. But where I'm worried is that it's setting up an ABC patterns. And if that happens, the S&P 500 is going to go down all the way to the 252. So we're going to get an idea what happens. But now let's take a look at probably the best way to get an idea. And that is going to be the QQQ, which is the Nasdaq Index. For the Nasdaq, is a little bit different than the S&P 500 and the Dow. As you can see, I created channels, and in these channels, we can see that it was a little bit overbought in this area around the 170. And you can see in the RSI, and even though there wasn't a lot of volume, and this happened, like I mentioned earlier, during the first week in January. And you can see in the chart that the Nasdaq, even though that it has pulled back quite a bit more than expected, it is still overbought. It is around the 158. Look, we have this space between the bottom of the channel all the way to the price. So it's still about 20% of the chart. So it might still pull back around this area, which is the 155. What I would like to see is the Nasdaq trade around this area between the 155 to 170 during the next few months. That way we have a really good second half in 2018. And if you want to be conservative with the technology stocks, you can pay attention to the 50-day moving average, which is around the 149 price. And that is a huge deal because I highlighted these two. The 200 moving average to around the 50-day moving average is around 27% higher. So that gives you a lot of room. And I'm going to review only 3 stock charts. The first one is Micron. I sold the shares around the $60 price. I thought that the shares were a little bit too high. It has gone up quite a huge amount during a couple of weeks. But this is the weekly stock chart for Micron. And look at this return. It has been incredible during the last few years. And this is I draw the channel for Micron. It has been a little bit overbought during certain portions. Look at this. It was a little bit over the channel in these areas. So when the company went over 60, I thought that it was time to sell for most of my shares. Even though that I'm planning probably to come back in the next few weeks. And I thought that the company shares were moving up too fast. Look in February. From February, basically the whole month, from February all the way to March, it was mostly positive volume. And that is not what usually happens to a stock. And what happens when the company posts a lot of positive volume, you can expect a lot of negative volume during the next few weeks. And look at this example. From September and October, it had a lot of positive volume. However, from November to December, it was mixed volume, which is what you want in a stock. And what I would like for Micron would be to create some support around the $51 price to around the $54 price. That way it's gonna have more energy for the second half in 2018. Now the other company that I'm gonna review is gonna be BZUN. As you can see in the screen, BZUN has been doing really well during the last couple of years. Now you can see in this channel, it actually broke the resistance from this channel from September to December of 2016. And even though that BZUN has gone up a huge amount, it was mostly quiet during the first few months in 2017. And as you remember, during August, the company posted good earnings, but the shares sold off. And that happens when you see this huge volume. The company was a little bit overbought at that point. So it was a healthy pullback in order for the company to continue moving up. And at this moment, we're not overpriced. Even though the share price has gone up a huge amount in the last few months, it is still a little bit healthy. And what I would like for BZUN to do is to create some support around the 43 to the 45 area. That way it has more energy to go up even more in 2018. And the last company that I'm going to review, it is going to be Facebook. Now you can see it has created, and it was creating a good channel during the last few months. Since August of last year, the company hasn't moved that much. It was only up about 20 points. Now with all the bad news, it actually broke some resistance, which was around the 169 price. And we can have a pullback if we continue the bad news. The share price can go around the $155 price. And that is the risk if you plan to invest in Facebook at this moment. The share price might go down a little bit more. So the ideal plan will be to buy some small position in Facebook and then wait for the shares maybe to go up or go down. However, just be cautious because the company might pull back a little bit more. And with that said, that is gonna be everything for this video. Please give a like to this video if you found it helpful, or a dislike if you didn't like it. And as always, you can subscribe to the Financial Information channel. I want to thank you once again for watching the video. Have an excellent day and take care, my friends.